right, good morning. What's going on, YouTube? Guten Morgen. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, this is a news squawk I got going. You're like, what's a news squawk? It's a news squawk. Well, it reads the news to you throughout the day as you're trading. Let me give you an example. I have to refresh the server. This will give you an example of what it's like throughout the day. What I do is I just launch it on my phone and just leave it running all day so I can hear the news while I trade. Boop, boop, boop. Here you go. You ready? Wait for it. Shares of SMCI jumped 20% after the company says it won't restate financials.
Pound sterling weakens against U.S. dollar after Trump threatens to tariff BRICS.
Gold pulls back after Trump defends the dollar. Oil prices rise on positive China data. OPEC meeting awaited. Australian dollar, U.S. dollar price forecast. Gaps open and falls towards floor of range. U.S. dollar stretches higher after Trump tariff threatens BRICS. French political turmoil ahead. Here is J.P. Morgan's gold and silver price outlook for 2025 and cool, right? 2026. French PM Barnier to use special powers to adopt Social Security budget bill.
Gold prices dip as Trump tariff threat supports dollar.
Crude oil slowly picks up with traders bracing for OPEC plus meeting this week. Yeah, that's me reading the news and my lips aren't even moving. That's cray-cray, right? So anyways, that's a new service. It's on the TRADARS YouTube channel. I guess I can put that there for you. I think it's http://www.youtube.com/@tradars. I think that's going to work. You should check it out. All right, cool. So we're here today to address your success as a trader, both technically and fundamentally. And so how are we going to do that? Okay. Well, there are three things that go into a successful Forex trading business. One, you have to have good fundamental analysis. So TRADARS automates all your fundamental research. Market sentiment, macroeconomics, seasonality, positioning, and a whole bunch more. Complete, total package on your fundamentals, automated and available to you. So like, for example, today, one of the things we did in the earlier today was look at the seasonality of crude oil. Okay, boom, 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 boom. It's just that easy. Or later this week, we're going to have jolts. Oh, see, look at that. And you're like, well, give me some more time, right? So anyways, so we got all of that. So you have it all at your research, right? Okay, all that research at your fingertips so you can have good strategies. And of course, we help you organize things, right? So that you can just very quickly make these decisions. Most bullish, most bearish, so on and so forth. Okay? Cool. Then the second thing is you need to be able to do such things for technical analysis. So I've thinned the herd here, and I'm only looking at the types of patterns that I prefer. There are more patterns than this, but these ones are mine, right? Yeah, and we do it for Forex, crypto, stocks, commodities, indices. But there's a whole bunch more than that, because we also have things like we're tracking news volatility. So ISM in 35 minutes is going to be tradable. And here's all our economic research. If you like scalping, we have scalping radars to show you the patterns that are actually in play. They're not emerging, they're in play. You're like, only show me opportunities with 75% success of a chance of success. And then, of course, one of my most favorite right now is implied volatility. Oh my gourd. To show you where entries and stops are going to be placed. So look at that. About 2 hours ago, you had an opportunity to buy pound Swissy. Put a stop down there, you're golden. See? Oh my God. Tells you the time, what day of the week and what time of the day. So 2 hours ago, you can see TRADARS told you it was the best time of day for trading pound Swissy on Mondays. And it produced an opportunity. Awesome. So sound fundamentals, solid technicals. Okay. And the last component is performance coaching. Do you know how many hours of performance coaching just between Sunday and the end of today? 6 hours. Because we did swing trading or day trading yesterday, which we call the technical trading team, on a Sunday. Then there was actually a London Open. So that's that, right? And then there was my fundamentals, and then there was New York Open, and then we have Peter Ward doing his stock trading session. That's 5. And then at 4 o'clock, I'm doing the technical trading team again. So that's 6 hours today of performance coaching. Cool. The only thing that's missing right now is trade execution. Right? We're not a broker. So you're going to need a broker, and you want a particular type of broker. There's not many of these brokers. They're called ECNs. There's not many. Very, very few are ECNs. Okay? But you want an ECN. There's straight through processing. There's a symbiotic relationship. It's an ethical model based on your success. And this is a service provider that should be serving you, not trading against you. Trader's Way is a good ECN with straight through processing. You want to open an ECN account, and this is the one I recommend. Have for 10 years. So do your own due diligence, but hopefully my pushing you in the right direction helps you set up the base of your successful Forex trading business. Right? So basically, you can hire me to be your chief economist for a few $100s a month. And a whole team of others. Incredible. So there's your complete package. Cool. So we can start where? Stock market? Let's get this one. Biased pivots, bullish. Okay. All right. So we can look at sort of the day trade here. Okay. So do you buy at the green zones or do you sell at the green zones? Yeah. So, is this a helpful, useful tool to have something like this? Doesn't always work, of course. But if you get direction correct, then it's a very helpful tool. It's very similar to implied volatility. Based on what happened yesterday, you can calculate, well, if what happened yesterday has any bearing on what happens today, then this is a way to analyze similar volatility in the future based on what just happened in the past. Now, the traders.com implied volatility doesn't look at yesterday. It looks at, like, today's Monday, right? So the implied volatility tool that I showed you earlier, over here, let me bring it up. Okay. This looks at last Monday, the Monday before, 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 the Monday before. You get the idea? It just looks at Mondays going back many Mondays. By the way, did you just see it update? Yeah. All right. So let me bring this back up. So it looks at many Mondays, and it looks at every hour of every Monday for pound Swissy, and updates over and over and over and over again the hourly range, the 4-hour range, and the daily range. Every hour it updates. So it shows you what usually happens on Mondays on every hour of every Monday to calculate the likely range of this one particular asset. So think of it, if there's 24 Mondays analyzing 24 candles per Monday, it'll give you basically a floating pivot point. It's not actually a pivot point, but if you're used to pivot points, it's recalculating pivot points every hour for just Mondays, for just pound Swissy. It's not really a pivot point, but it's a similar kind of idea. If you already know you want to buy pound Swissy, what's the only question you have for today? Well, you know you want to buy it, so that's not a question. You also know you only want to buy low because you can't buy high. That's dumb. So you know you want to buy low, and you know what you want to buy. So what is the only question left? How low is a good deal? A pivot point kind of looks at high, low, and close, right? Open, high, low, close. Implied volatility is looking at high and low over and 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 over to create an average high and low for this time of day on this day of the week. So you're like, they're similar but different. But the thing is, if you've done your fundamentals and you know you want to be long pound Swissy, like for example, I don't want to buy Swissy under any circumstance. So all I could do with this asset is buy it or not buy it. I know this fundamentally because traders.com has it. So I already know. Cool. So the second thing is, if I can only buy it, what's a half decent opportunity for buying it? And this is what the number was a couple hours ago. Okay. A couple hours ago. Okay. There. But we also know, okay, we're at here. So 2 hours ago, when we were here, we also know it was the best time of day to buy this asset on a Monday. Neato. Neato like a yellow Speedo. Huh? Neato like a yellow Speedo. So anyway, so if you were a bull, this was your plan. And you drop a stop here because based on past performance, it's very, very, very unusual for it to drop that much in the next 24 hours. But if it did, you probably want to be out anyways because it's 100% pullback, and that's definitely not an uptrend. Oh, my lordy, huh? Do you see the power of having this kind of data? Now, this page doesn't tell you to be a bull or a bear. That's what these other pages tell you. Yeah. Okay, so how would you know? Okay, so sell Swissy. That's one way of getting there. Sell Swissy. Yep. How's another way of getting there? Okay. Hey, look, sell Swissy. Did you know 91%, okay, 91% of institutional investors are short Swissy? Why the heck would I buy? Like, in that case, knowing that, you'd have to be a fool to sell pound Swissy, right? Yeah. A mama didn't raise no fool. Pound, right? Bullish, 63% of the market's long the pound, and 91% of the market's short the Swissy. Okay? No, Peter, but I've been so happy and proud for you because I know you've crushed it. Like a big high five and a hug and a slap on the ass. You did a good job on that over the last few years. You've been consistently focused on XRP and always in the right direction. So big high five. I'm so happy for you. Okay? Killing it. Killing me softly. Look at these prices. Look at these prices. Yeah, Peter's been long since it was like 13 cents. It's $2.50. Oh my God. Yeah. So anyways, XRP, there, the ripple is north. Okay. Litecoin, about the same. Ethereum has been a laggard. Okay. But, okay. So, generally up. This is a higher time frame. Pay attention to the time frame. Okay. And I hope I've trained you well as your, as your consultant, your economist, and your coach, that you look at these and you're like strength or weakness, opportunity or threat, and you immediately say strength and opportunity. So long, Bubba. Okay. Strength, opportunity, weakness. Yes, actually a little bit of an opportunity. Yeah, sell a falling wedge for sure. So what the hell is going on there? Everybody else is up. And you know if it's up, it's stuck. Like, what does he mean by that? I think it's Cardi B. But don't look it up because I don't recommend her. Yeah, I'm a Swiftie. Taylor's classy. That's right, Derek. Yeah. Thanks, DB. I have to admit, though, being a father to a daughter, and you're driving down the street and she's got Cardi B on the radio, and you start listening to the words, you're like, oh, sweetheart, let's change the channel. Yeah. Yeah, change the channel. Don't listen to this until after you're done grad school. Yeah. Is that right? 06, man. Yeah. Which is crazy because I was like 14. Yeah. So, hey, man, thanks for your friendship and your loyalty. That's killer. Is that right? Yeah. That's interesting. All right. Well, let's look at some more patterns. How many people like these emerging patterns? Anyone willing to admit they like using emerging patterns? Some people may not understand or know how to trade these. There is a download in the description below the video. There's a download. It's free. You download it. It gives you a cheat sheet. But it's killer because they're early. That's the one thing you have to understand. These patterns are all early, so they're not all going to work. They're forming. There's a good chance, but they're not hundo P. Because if you wait for the scalp, meaning under the scalping tab, there's patterns that have already come together and formed, but you already missed half the move. That's why they're scalping patterns. Now, some of them are still worth a couple hundred pips, but most are only worth 18 pips. Or I think it has to be more than 20 pips to get it to be a valid scalp. So, most are only 25, 30 pips. Some are a couple hundred, but most are only 25, 30. But these ones are forming, so you're ahead of the curve a little bit. Because, there's still, let's look at this. Like if you're going to look at the weakness in gold, if you look at this as resistance, then there's a pretty reasonable chance, okay, it does that. And then, if that happened, then this is definitely not an up channel. But if you're going to trade it like an up channel, because it made lower low, lower high, not an up channel. Lower low, lower high, not an up channel. Lower low, lower high, not a up channel. Lower low, higher high, not quite an up channel. Lower low, higher high, now you got an up channel. Lower low, higher high, lower low, higher high. So what's going to happen in the future if this up channel continues? Lower low, lower high, lower low, lower high, and we eventually would break through this. So your filter now is your alpha. What does that mean? You're a bull and you know why. Not because of the stupid pattern. Patterns are stupid. Quite literally. I'm not even joking. Why are they stupid? They're only showing you what the price action is doing on this time frame. So if it suddenly goes from lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, higher low, it doesn't make a mistake. That is happening. But only on this time frame. It could be bearish on the daily. But this is happening, and you might have missed it. But if you're going to be a boss, and by the way, look at my cup. Like a boss, because I am a boss. So what does that mean? I have an opinion because I've done research fundamentally. I've done research seasonally. I've just done research in general. And I talk to a lot of people. I know what they're thinking. And I might be the dude that has this opinion. So now the way you filter all of this data, okay, this might be something on a 15-minute chart that I hold for 3 months. No, Matthew, these are my cups. They're not for sale. Right? So if you're a boss, you've made the strategy, the decision, and you can talk to people about it. They're like, what do you think about gold? Oh man, don't even get me started about gold. Let me give you 5 reasons why I'm buying dips. I'm long and strong. And talking about your MACD crossover is not going to cut it. Okay? Sky Killer, I think I will. Okay? I think I will. By the way, which reminds me, if I did an annual outlook where I go through my deepest, darkest thoughts about what's going to happen over the next 12 months. I did this last year. So an entire outlook for 2025 and follow up, right? Follow up in the second quarter, third quarter, and fourth quarter. So 4 meetings. Okay? 4 meetings. We meet, let's say, December, and then 3 more times throughout the year so I can update depending on what the Trump administration does or does not do, what China does and does not do, so on and so forth. Okay? I'm going to charge one price if you want me to do it. Like if 8 people show up, forget about it. If 80 people show up, fine. Okay? Okay? $50. I might make it 47. How about that? $47. See, I already just gave you a huge discount. 6% discount, just like that. Boom. Okay? It would include all 4. That way I don't have to like set it up 4 times and like, please pay $15. Please, I charge $10, $12 for these things. They're so silly, right? So I'm like, you know what? Why don't you just commit for a year? I'll commit for a year. It's $50. Okay. Yeah. And that ends up being, I don't know, the first one's probably 10 hours of work is what I've been saying. These other ones are probably 5 hours of work. Okay. So 25 hours. So yeah, it's $2 an hour of me working. So if you're into that, I'll spend the time. If you're not into it, don't worry about it. I got things to do. Right? Because I have it in my brain, but to put it together in a presentation is a whole different thing. So if you guys are into it, I'll do it. So let's do a vote here. Let's do a vote. I need to know if I'm even going to think about doing it. So, will you pay, let's be specific. Oops. $47 for quarterly market outlooks. Because that's, I guess, what it truly is. Yes, no, and that's it. If you're a maybe, choose. If you don't choose, I just don't do it, right? So anyways. No, total. No, total. One time. I know, Chris, it's stupid. But again, I want to do this with people. But if no one wants to do it, then I don't want to waste my time. Like, that's just it, right? Like, dude. Yeah. Let's see. So 75% of you haven't even answered. So that disturbs me right away. Yeah. And a significant amount said no. All right. Cool. Yeah. Yeah. And by the way, for those that are saying no, thank you for the honesty. I appreciate that. Like, really, I don't want to waste my time. I have very little. And during the holidays, I should probably spend it with my family. Okay? No. They're being honest, Matthias. There's no negativity here, right? Yeah, well, that's the thing, though. If you're right, Chris, if you don't know fundamentals and you're like, quote unquote, just a day trader, I think you're doing yourself a disservice. If that is correct, because you need, that there's so much you can go into, right? Like for example, let's do last year. How many people here attended last year? I can't remember if it was early January or late December. I think it was like the second week of January. How many people said that, attended that one? Okay. And now let's filter through that as a day trader. Okay. So normally the third week of September, I go ape crazy and start, let's say, buying the stock market, buying the yens, buying yen pairs, buying, well, I guess I should be specific. Buying the stock market, selling the Japanese yen, selling the dollar, right? Right? That's what I always do, starting the third week of September, no matter what. Except last January, I said, not this year. Do not buy the stock market in January. Do not sell the US dollar. Not January. Third week of September. Do not sell the dollar. Do not buy the stock market. What I said is it's going to happen a month late. So I said those markets are much more likely to be down, even though every year I almost blindly make those trades. But I'm like, not in 2024. I said instead, October is going to be down. And in the second half of November, the day after the election, is when you want to make those trades. And correct me if I'm wrong, but I think that's precisely what happened. Oh, there's reasons for everything, Chris. Yeah. But I just want to point that out. Like, if I'm wrong, tell me I'm wrong. But October was a bad month, and the best month of the year was November. But it didn't go up until after the election. So think of it now, like we're going back to like Chris's thought, like people that don't want to attend maybe are day traders. Dude, if you knew October was going to be a risk off month as a day trader, okay, bada bing, bada boom, now you're day trading in the correct direction. And if you knew we'd likely move to the stock market rally and a weak dollar and all that kind of stuff in November, as a day trader, that's critically important to be pointed the right direction. If you don't, and you only do technical analysis, what you risk is this, okay? Higher high, higher low, you buy. Higher high, higher low, you buy. Higher high, higher low, you buy. Great day trading. Double top, lower low. Oh, you lost. But you probably bought here, loss, and you bought here, break even. So now you only have 2 trades open. Lower high, lower low, right? Lower high, sell, lower low. Lower high, sell, okay? Right? And then up. And so what might happen, and by the way, I wrote a magazine article about this probably 15 years ago. In a magazine, I wrote about this where, okay, like you got this one, you're a winner. You got this one, you're a winner. This one, break even. This one, loss, because it made a lower low. So that's a loss, which now this one broke even. Now you took this one out. So now you've made 4 trades and you only have 1 winner. Now, at one point, you had 1 winner, 2 winners, and 3 winners. But by the time you end your whole period of a week, you end up barely, maybe not even, you might have actually ended up with a loss. Now, this is a break even, and this loss takes out that win, so you only have 1 winner, okay? And then you sell this, great, you make money. And then you sell this, great, money, right? Then you sell this, great, you make money. Oh, no, and then and then, you know, so then you end up losing that and a loss there, which takes this one out. And so what happens is you have 1 break even, right? Per move. So let's say after 2 weeks, let's do it differently. Okay, after 2 weeks, you have 2 break evens. Okay, 2 wins. And let's just call it 2 losses. I know that's not exactly what I do, but okay. And that's your whole entire week. What I'm suggesting, if you are, as Chris said, just a day trader and you don't need these fundamental nonsense, you're really doing yourself a disservice, because at least one of the things we can try to do is cut out the break evens through anticipation by having the data. And your wins should be bigger than your losses. Okay? Right? Or you get rid of 1 loss or whatever. You just get like, you can anticipate these changes in direction. So maybe you get 2 winners, okay, 1 break even and 1 loss. Okay? Does that matter? If you can end up going this way? Yes. Yes. It gets you above break even. And just that little simple little change with a little bit of anticipation could help you survive a year that, like, it turns a year of modest, tiny little losses, or a year that ends up being break even. It changes it into slightly positive year. You actually made some money. It might not be a lot of money, but the math has changed because you have this level of strategy, this level of anticipation. And what it ends up doing is helping you survive some of the first years. Because if you have 3 years of break even, you quit. Well, what if you had 3 years of modest wins? You stay with it and you get better because you get more and more experience. And I think fundamentals and seasonality and market sentiment, if you can read that, the math of your trading improves. I honestly believe this, because you have a level of anticipation where if you're just a technical trader, you have a lot less anticipation. So for example, there are months where pivot points work, right? So let's say there's the bottom of the range and the top of the range. So you get something like this, and it works, right? How many people here have heard me say this month, whatever that month is going to be different? And this month, we are actually going to go much higher. And we're going to break some of our rules in the pivot points because of things like seasonality. And we are not going to get out at M4. Nope. We are not getting out of R2. Nope. This month, we're going to go to R3. How many people have heard me do this? It's not every month. It's only a few months out of the year, but I can tell you right now which ones. I'm not going to, but I can. And half of you already know because I've already taught you. But the thing is, if you're technical only, you can't do that. You don't know when to strictly obey the rules and then sort of weakly obey the rules because there's no level of anticipation. Now, am I always right? Am I a genius? Do I have some crystal ball? No, of course not. But I am a supermodel, and that goes a long way in this society. Do you like that dry wit? Canadians are funny. Half the time you don't know if they're joking or not. Yeah. Yeah. Which is funny as heck. Yeah. Yeah, the first time my wife met my Canadian family, we all met together at a restaurant for coffee and lunch, which is a very Canadian thing. And there's about 15 or 20 of us sitting around this table. My wife is getting to know everybody. And what she doesn't realize is everybody's playing a joke on her. And they're telling stories, a little bit of a fib. And she's like, really? You know, my wife's not dumb. My wife's actually very, very, very smart. But not used to that Canadian humor where after about 20 minutes, she's like, wait, are you guys pulling my leg? You know, my whole family's in on it, right? So anyways, welcome to Canada. Like, everyone's just straight-faced telling the stories and just adding to the story. And, you know, when you got aunties and uncles pulling your leg, you know, it's funny. So anyways, welcome to Canada. Welcome to Canada, eh? Oh, for sure. And she learned that you can put gravy on your French fries. Still one of my all-time favorites. Still one of my all-time favorites. Yeah, you wait, man. You go to Canada. Okay? You can go to Tim's, that's fine. But go to a place, go to Smitty's and get some fries and with gravy. It's going to change your world. So anyway, we don't have a lot of votes and only 75% are in on it. I guess we'll have to talk to more people, right? I guess that's pretty good. 70, about 75. That's all right. Not super exciting for me, but maybe. All right, so it's a maybe. Let's take a look at the stock indices. How we doing? Markets are open, which is nice. Just seeing how we did. All right. Yeah, it's all right. It's an okay open. If you guys are like, man, that's weird. No, just think about it like when you get to the South, it's like biscuits and gravy for breakfast. Well, a Canadian wants fries and beef gravy. All right. ASX, you guys ready? Okay. Strength or weakness? We're doing ASX. We'll do it here. I'll redo it. Strength or weakness? Come on, don't take a minute to answer. Okay? Yeah. Come on now. Let's go. Okay? Opportunity or threat? Okay? This pattern on ASX exhibits strength, but it's a threat. Okay, DAX, strength, weakness, opportunity, or threat. So strength or weakness? S or W? Come on now. Giddy up. Let's go. Strength or weakness? Go, go, go. Move it. Move it. Strength, opportunity, or threat? Come on, let's tear up this chat. Tear it up like it's dynamite. It's a threat. All right. Let's go to footsie. Okay, strength or weakness? Come on, the faster you can do this, the better you're going to trade. All of this, you should be able to go through 7,500 charts in less than 10 minutes. And that's you critically looking at each one of these asset classes, not just stock indices, but crypto and Forex and commodities and individual stocks. Like your whole morning routine of looking at 7,500 charts should take less than 10 minutes. This is strength. Is it an opportunity or a threat? Okay? These have already come out an hour ago. That's right, it's an opportunity. NASDAQ, strength, weakness, opportunity, or threat. Let's do it. Strength or weakness? Yeah. See, guys, I am going to train you to be a solid trader. If you don't have a real technical pattern, then you don't have a real opportunity to make money. Okay? This is strength. It's an opportunity. But look, the opportunity came out an hour ago. And look at, dude, an hour ago, it looked like this. We're already 3/4 of the way to the target. It's already happened because these charts are live. They're not static images. So you already know it's worked. Dude, these are live charts. Do you understand the processing power of traders.com? It's insane. Like that implied volatility I showed you is insane. These live charts updating in real time is insane, right? The news, which came out just a bit ago, okay, 8 minutes ago, okay, it's already updated everything. It looked at, I don't know, 10,000 candles in the past. There's no scalp on Aussie dollar under these circumstances. Okay, it came out greater than expected. But on euro dollar, there's a scalp, there's a day trade, and there's a swing trade. So down for a couple hours, down for the rest of the day, but up later in the week. Do we know that's true this time? No, we know that that's what has happened in the past. Whoa, bro. Whoa, bro. Yeah. Cray, cray. Cray, cray. Cray, cray. Yeah. Crazy stuff, right? 66.7% chance. Because we need the accuracy, guys. 2/3 of the time, down after situations just like this, but only on this pair, not a whole bunch of others. Do you understand? Like, there's tens of thousands of candles being analyzed to get you this data. Crazy. Crazy. Okay? Crazy. Okay, look at these scalping opportunities. Oh, look at that, eh, Jim? It still doesn't quite work right. Interesting. Oh, that's it. That's the end, isn't it? Jim's pointed this out, that this page doesn't load correctly sometimes. There's just so many scalping opportunities. It's unusual right now. Wow. Interesting. Maybe a breakdown on that pound Swissy from earlier. Whoa. Pound dollar breakdown. That's interesting. There are some breakdowns happening. All pound. Look at that. Look at that. That's a lot of breaks, huh? Wow. Huh? Wow. Look at that. That's interesting. So Derek thinks I should do the annual and quarterly outlooks. So Derek's in. Derek BLL, well, hell, rock is for anthrax. Stewie can rock bells. Time for me to exit. Terminator exit. Turn it up. Bring the noise. Yeah. Yeah. Yeah, everything's already hit. That's the thing. You know, so this is all scalping, right? This is the scalping tool. So you got to be Johnny on the spot. Okay. You know, we have an email service that I haven't promoted in a year. I guess I should probably let you guys know this. Some of you have it, but I haven't talked about it since I launched it, right? I have an email service where what it does is it looks for multiple agreeable patterns. So let's say pound yen, there are 3 different patterns on 3 different time frames, and they all say sell. And that gets emailed to you. So there might be a scalp, a spot, and a swing. And they all say sell pound dollar or sell pound yen, whatever. But they have to be the same currency. The patterns have to be active at the same time. And I think the minimum required potential profit is 20 pips. But very often it's a lot more. But I don't even think you can sign up for it. How strange. So anyways, Craig. Yeah. All right. So, by the way, what time is it? Oops, wrong one. I guess I got to go pretty soon. Peter's got a session coming up. Peter Ward's doing a session on how to trade the stock market. That's in about an hour. And it's available to all members of traders.com. You don't have to be on any particular team. All members have access. I highly recommend it. Yeah, I highly recommend it. We have some really good performance coaching. One of the things I really like is that, you know, not only have I known the performance coaches for a long time, 10 years or more. I've taught all the performance coaches how to trade. And so there's a lot of Wayne analysis, like you're going to understand what they're talking about because, well, we have a lot of similarities, but I love the differences too. But it's not like you have to learn 5 different languages. Like, okay, what did Wayne say? What did Jessica say? What did Peter say? What did Brian say? What did David say? And they're like, they do everything different. I don't know what's going on. No, the performance coaches are amazing people, and they're here to give back to help you succeed. So I make these sessions available to all members of traders.com. So I welcome you to become a member. And you should probably look out for an email. I think one of the things I decided to do this year that I haven't done in quite a few years, I'm going to send out a special for you guys to upgrade your accounts to pro membership so you have access to everything. All these performance coaching, the private performance coaching, all the videos, all the tabs with all the tools, the scalping tools, and there's new ones I haven't even launched yet, and the fundamentals and the technicals. I just want you to have everything. So I'm going to send out some sort of special, and I really hope you upgrade your account because I want you to have this stuff. So I'm just going to make it cheaper for you. If you don't mind, I want you to have everything. And one of the major reasons is I got some cool stuff coming down the pipeline, right? And I want you to have them in the future. Yeah. Well, Sky Killer, like if you're trying to figure out implied volatility, which is important for trading options, I think didn't I cover it in this session? Maybe I covered it earlier today. Pivot points are essentially implied volatility. So like if you were trading options, let's go to the scalping tool. Scalping. If you were trading options, well, let's do it this way. These daily pivots are kind of like implied volatility based on what happened yesterday. What would a good opportunity to buy? Like what price would be a good opportunity to buy? And where would you put your stop? Well, you could trade options using exactly this information. Now, you probably don't do 0-day options, so you might do weekly options or monthly options, right? So how do how do you account for that? Go to your bias pivots and say you're going to trade 7-day options. And you're like, and let's say you want to be a bull. Let's switch to bear. Okay, you want to be a bull. So based on weekly implied volatility, okay, did it go? Did that do it? Bullish daily. There we go. That's what I want to do. Sorry, I can't talk and trade at the same time, right? All right. So if you were going to use implied volatility, okay, last week you would have bought, okay, you want your strike price to be down there, you want your stop to be low, and you're trying to get to there. And now the week is over, so what did you do? And your strike price, you want to be around here, and your new target is already up there. Okay? And same thing, this was a buying price. Your stop would be down here, so your strike might be the central pivot. Your stop would be below, and you're trying to get this up to here. So your pivot points act like implied volatility. So you might look at implied volatility, and let's say this weekly had an IV. Let's make it 20%. Okay, what does this mean? Well, on the flip side, there's an 80% chance price does not do this. You might want to look at that. But pivot points are like that too. This is a buy, and if it stays trending, it'll probably go up. And this is a buy, and if this market stays trending, this is probably a buy. And, right, this is probably a buy. These are all buy. And you can think of it as implied volatility like, well, there's an 80% chance it doesn't collapse, but if it did, you want to be out. And it's probably not going to collapse because it's trending. But if it did, you probably want to be out. If it did this, you probably want to be out, but it's not likely to do that because you're a trend trader. Yay! So Sky Killer, that's how you would use it when you're trading options. But then you're like, I don't trade options, I trade spot. Well, it's the same thing. See, when you use options, you know what your maximum loss is. When you buy, okay, let's say euro dollar, and you put a stop loss below support, you can calculate what your maximum loss is. The only thing is, in the spot, you probably have better leverage. And you can collect income through swap. Options don't do that. You can collect income by going long NASDAQ here when price is up here, and you sell a put at that strike price. And that gets you long. So, whether you use options or spot, like this is spot Forex, if you understand how to trade, it's all the same. It doesn't matter. Use whatever instrument or asset class you want. If you know how to trade, you can make money. Now, it's not easy. I'm not so arrogant to say it's easy, but I am trying to tell you it's all the same. There might be slight different strategies that are options particular, but like, what's the most important thing about trading? The most important thing, whether you trade spot, futures, or options, is that's your opinion. Now, if that's your opinion, what do all these other traders, spot traders, futures traders, options traders, private contract, right, structured product deals, and like all of it is the same. If this is your opinion, then you watch it make a higher high, and then you buy a dip. You watch it make a higher high, you buy a dip. You watch it make a higher high, you buy a dip. And you know how low is dangerous? Okay, this is not too low because you're essentially doing weekly implied volatility. And you just keep buying dips. And you just keep buying dips, and you just keep buying dips, and you keep buying dips. And day traders are like, I want to buy it, then I want to sell it, then I want to buy it, and then I want to sell it. Like, dude, why don't you just buy dips? You see where I'm taking you guys? Why don't you just buy the dips? And if you got a trend, why don't you hold them? Okay? Okay? Yeah. Okay? So the election was here, it dropped, and then we had the greatest month of the year. And I told you in the second week of January that it's after the election, and then we're hot to go HOTTOGO. Okay? And the S&P 500 was up 5%, but that's if you bought here. But what if you bought here and 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 bought here? Okay, 5 and 4 and 3 and 3 and 2 and 2 and 1. And then you're going to buy the next dip. Okay, yeah. So that's where I'm like strategy, guys. For that, you need to know things like seasonality. And so I don't care if you say to me, well, Wayne, I am just a day trader. I don't believe that they're just. What do you mean just? I think you could be a kick-ass day trader if you understand fundamentals and seasonality and market sentiment and implied volatility. I think you could be a wicked awesome day trader. So you either know or you don't know. You know? So I got nothing but love for you. I want you to have a huge success as a professional trader. I got some really killer things working in the background that I think you are going to not just love, but like financially benefit from. Okay? Yeah. So that's killer. So I'm doing some stuff for you. I'm your advocate. But I need you to join the community, guys. So I'm going to make it easy for you. But I hope you take the opportunity. Okay, fundamentals, technicals, sentiment, seasonality, volatility, performance, 5 hours a day of performance coaching. Man, I'm going to send you an opportunity, but you need to grab it. You need to grab on. 2025 is going to be an epic year, but you're going to need to adjust your strategy. It's not going to be like this year. Next year's going to be different. So are you ready? Are you prepared? Peace on earth. May the pips be with you. May our profits be above average. I'll see you when I see you. Cheers.